Hello friends, welcome to the channel where we put everything we save onto the stock market. So I have just decided that my new goal for 2020 is to max out my ISA, get up to £20,000 invested into stocks and share in 2020. Because previously I was saving for a house deposit and that's not really happening for me. So I don't like to see those money just sitting in a bank account with a low interest rate, and I thought this is a better idea, and maybe it's not, but if it's not, just follow me for more entertainment. Like, it's a great idea either way, no? So here's my massive shopping haul of what I bought for £15,000 on the stock market. I currently have invested £14,652 and it has given me a return of £179, 1.24% increase already, which I don't know, is pretty average. I've done this over the last couple of months, the investment. I didn't put 15,000 at once. I'm not that crazy, but I've put them over the span of 2 months. And so far it's done pretty good, but yeah, I'll be honest, like, it's fluctuating every day. I have days when it's negative and days when it's positive and days when it's really positive and days when it's like they make a mistake. Is this okay? And that's really normal in the stock market. Like, it's gonna fluctuate. It's cool. We're chill. We're not panicking. We're not panic selling, only panic buying. So starting out with my investing, I have shares in AbbVie, 1.5 shares, and this has gone down recently, but I mean, good time to buy, right? AT&T, once again, 9 shares. BP, PLC, this is the ones like I kept thinking I want to sell them at some point because they're going down so badly, but then the dividend pay was really good. If you want to watch my other video of the BP dividend pay, that was pretty nice. So now I'm a bit like, do I really want to sell them because they paid me? That was nice of them. I like that. I have 2 shares in Coca-Cola. Coca-Cola is just something I like to buy when I crave something sweet on some frizzy drinks. This is my diet. I just don't buy the Coca-Cola, don't buy the fizzy drink, but buy some shares, and then I feel much better. Is this a diet tip? Am I turning into a diet channel? This is working for me. Just, you crave McDonald's, buy McDonald's stocks. It's always working. Coming up, 10 shares in Diageo, 1.2 shares in Goldman Sachs, 500 shares in Greencoat UK Wind Energy, because I was going through a phase that I really wanted to support renewable energy, and I still want to. Like, I don't know, I might have went a bit overboard, but I don't regret it. Like, it's a company that I support and I think it's good to invest in renewable energy companies. So I think I will try to invest more in this in the future, in companies like this, to say, not necessarily Greencoat, because £700 is already a bit excessive. 8.5 shares in Intel, and then we're coming up to the funds, because most of my investments have been in funds. And I have iShares FTSE 100, iShare S&P 100, iShares Global Clean Energy. This is a fund I was looking at in my investing in renewable energy phase, and I still think like it's a good investment, possibly. I don't know if this fund particularly, but I'm looking at alternatives to invest in more renewable sources. And this one has done really great, like 36% increase. Like, I really wish I researched this more and I actually invested more, even more than like Greencoat, because that one hasn't performed as well. But hey, I've put £5 and I made £1. Life. iShares UK dividends, 8 shares. iShares UK property, 118 shares. Again, trying to get more into property investments just because I think it's something that I am interested in. Johnson & Johnson, 1 share. JP Morgan, 5 shares. National Grid, 1 share. National Grid, I think it was the first share I received when I started Trading212, and I was planning on selling it because I thought, like, I know nothing about National Grid, but it stuck around, and now I feel attached and I don't want to let go. Realty Income, 5.66 shares, and this is the monthly paying stock that I again grew quite fond of in my dividend recap, because I'm trying to do a dividend recap every month or so, and Realty Income is gonna always be present, and that kind of warms my heart, so thank you, Realty Income. Royal Dutch Shell, same as BP, I was planning on selling them. Then they paid me the dividend and I grew a bit fonder of them, and now I'm not sure if I want to sell them, but the dividend, they paid quite a good dividend, and I didn't realize they reinstated their dividend, so it was a really pleasant surprise when I got a dividend pay from them. Secure Income, 138 shares. SPDR S&P UK dividends, 29 units. Taylor Wimpey, 102 shares, and this is once again a company that invests in property development. And the fund I've put most of my money in so far is Vanguard FTSE 100. I've put £5,269 in it, and it's kind of going down, so it's losing me money. The reason why I've put so much into this one is my investment strategy is a little bit weird, but this is what I do. I look at things that are on sales. I call them on sales, like their price is going down compared to what I bought in the past, and that's the ones I want to buy. And maybe it's not right, but that's the way I've been doing it, and it's kind of been working for me, and I like it, and it makes me happy. But tell me I'm wrong in the comments. So as an example, like normally now I would say, okay, FTSE 100 is going down by 0.29% as compared to what I bought in the past, and I'm like, yeah, I want to buy more of this. It doesn't make me really want to buy more because it's just 0.29, but if it was like you lost 5% of your investment, I'll be like, yeah, I'm putting more, because it's a fund and I trust funds to be going up in the long run, and the fluctuations don't really mean that much in the short run. But really, I want to put a lot more money into Vanguard S&P 500. And if I go to the Vanguard S&P 500 at the bottom, it's looking absolutely brilliant. Like, I will look at my investments. I've put £1,000, 900, and I got £100, a return of 5.73%, which is really good. Like, I like that. Thank you, S&P 500, you're brilliant. But that doesn't make me want to invest more. That's like, okay, it's doing great, thanks, keep it up. But when it's going to like, you lost £100, that's when I'll be like, now I'm putting a lot more in the S&P 500, and I'm kind of waiting on S&P 500 going a bit down to invest more into it. Okay, going back to my other Vanguard funds, I have Vanguard FTSE All World Dividend Yield, I can't see the full name, but VHYL, and I've put £889, 23 shares, and I am up 1.77 percentages, £15, which again pretty good, and it's high dividend, so it's paying really good dividends. Sorry, my light is really terrible, but it's sunny in Scotland, can you believe it? And then my last fund is the Vanguard FTSE Emerging Markets, VFEM, in case I'm saying the name wrong, and I've put £1,600, 34 units, and I am up by 4.79%, £73, which is pretty good. And again, it's paying, I think it's paying quite a good dividend. I can't remember what was the dividend for this one, but all the Vanguard ones are pretty good investment in my opinion, and I feel secure in investing in funds. And yeah, finally I just have the S&P 500 that I showed you earlier, up by 5.73%. So yeah, this has been my portfolio update. Thank you very much for watching, and see you next time, hopefully with a maxed out ISA and not too many mistakes. Goodbye, thanks for watching.